Okie dokie, artichokes, let's get to it. In this video, I want to recap my trade from the day and basically explain how I am the luckiest trader on this side of the Mississippi. Then I want to get into the major market news, what caused the market to rip sky high and then to plummet. And his name is Powell, the chairman of the Fed, and some of his commentary today at a live speech at Stanford. So I'm going to break down what he said, what he didn't say, and what it means. And then I want to get into a little bit of drama related to the former President Trump and then his new stock, DJT, and how he's suing someone, but they're suing him, and everything's getting a little bit crazy. And then, of course, at the end, I'm going to wrap up by letting you know all the major things to pay attention to for the remainder of this week. Now, if you enjoy these types of daily market breakdowns and a little bit of this trading journal-esque type of vlog stuff, let me know by smashing the like button. Don't forget to subscribe, and hey, give me a little bit of a shout out in the comments below because it does help with the algorithms. So I'd really appreciate it. And with that being said, let's rock. Here was the official headline on the day. Dow closes lower for a third day as stock's second quarter woes continue. That title doesn't really encapsulate all of the craziness of the day. Let me show you what I'm talking about. Here's the SPY. It ripped, went sideways, vomited. The Qs ripped, sideways, vomited. Gold ripped all day. Bitcoin exploded out of the nowhere and then came down. So it was a lot more volatile than that will seem. And I can't complain. I should count my lucky stars because I got very lucky. Daily DGen report. I made $840. This is why you should sign up for the Discord, because it's free. The first month is free. Use the code Goonie. It's in the link below. Sign up on Locals, use that code Goonie, and that's how you get connected to the Discord. So if you want to trade with me, you can do so. But let me recap. Well, around 12:30 it became evident that my trading system, Piper, was not going to trade today. No signal generated. Alas, I decided to not care about that, and I traded anyway. I decided to sell some call premium. As in, here's what I saw. I saw this, and I mean, it was almost comical. If you were on stream this morning, you would have seen it. By the way, I stream every single morning, Monday to Friday, 9 to 11, if you want to see a trading show. But anyway, right here, I saw the pop. I saw that the EMA cloud was still a bit red, and we were starting to come back down. And I thought to myself, you know what? You could front run this, sell some call premium now, and you'll get even more money.
And you'll seem like a genius.
This is the part where the narrator would cut in and probably go like, and in fact, he was not the genius he thought he was. Because mere seconds later, the market popped, going against my position. But wait, like Billy Mays, there was more. I traded the wrong position. Generally, when you're trading SPX to really protect your downside, you only trade it by a spread of 5. For whatever reason, my brokerage had auto set it to a spread of 20, meaning I took on way more risk. In fact, 4 more times risk than I thought I did because of a stupid fat finger mistake, and very promptly it went against me. And like any good degenerate trader, I held and I held and I held, and I'm like, all right, that has to be the extent of my problem. And it started to come down. And I thought, oh yeah, here we go. Oh buddy. And then went back up. And then this is right around the time Powell started to speak, and I'll be breaking that whole thing down. And it vomited. I was like, oh, I'm good. And then it ripped back up, and I'm like, what in the world's going on? And then finally it vomited, and I got out somewhere in here, and I didn't have to ride this back up. But I could have blown out. I could have lost 50% of my account today. I was paying attention to it. If it pushed much more than 521, I was going to cut it. But it was a fat finger mistake. I ended up capturing my gains. As you can see, I sold at 90, captured at 20. So I made about 70 cents per one, aka 78%, aka 840, aka enough for more to pay than an entire year of the Discord. So it was crazy. I got lucky. It wasn't really monk-like trading today. Like I said, I'm just the luckiest trader on this side of the Mississippi. But you might be thinking, what prompted all this volatility, the rippity skippity doodah? And his name is Jerome, Justin, Chair Powell. Don't expect cuts until more confidence on inflation. So he spoke at Stanford today, and he didn't really give us anything new. Powell, I do think monetary policy is working. So he's basically saying we're making progress on inflation, but it's not exactly where he personally wants it to be at to be confident in actual cuts. And this was all in the same time where we had 2 other Fed members speaking today. We had Bostic and we also had Daly. Bostic said, hey, I think we might have 1, and it's going to be in Q4 of the year. Daly said, hey, I think I might have 3. So right now, if you look at the betting markets, it's going to be about 2 this year, which is kind of funny because at the start of this year, the market was betting on 6. So that's quite the fall down from what we initially thought would happen. But anywho, Fed's Powell emphasizes need for more evidence that inflation is easing before cutting rates. And this is basically the TLDR of what he said at Stanford today. Give it a listen. I know it might be a bit boring, but it is impressively important.
Over the past year, inflation has come down significantly, but it's still running above the FOMC's 2% goal. In February, headline inflation was 2.5% over the past 12 months based on PCE index. A year ago, it was 5.2. Core inflation, which excludes the volatile food and energy components, stood at 2.8% in February. A year ago, it was 4.8%. So this is very welcome progress, but as you can see, the job of sustainably restoring 2% inflation is not yet done.
That's the main gist you need to know of, hey, we're making progress, but not exactly where we want to be. So even though the market at the start of this year thought we would have 6 rate cuts, as every month comes by and inflation's not going down that much, the odds of these additional rate cuts is getting lower and lower and lower, to the point that this is probably the funniest thing I saw today. No rate hikes this year, no rate cuts this year. We have a little bit of the Undertaker coming in. So people were stoked. But all of a sudden, it seems like the Fed is being pretty serious when they say they want to see clear, verifiable progress on the front of inflation before cutting anything. So in terms of odds, right now, the next FOMC meeting, which is where they decide what the rate cuts or hikes or what they want to do, end of April, start of May, 99% chance that they're not changing it. We're at 5.25, 98% chance we're staying at 5.25. If you go to the June meeting, the markets right now, the bond/yield market is actually saying, okay, 61% chance that we might cut it by 25 bips. And then by the time you get to July, all of a sudden we're looking at in the realm of 76, 77% chance of at least one rate cut. And once again, that is for the July meeting. Those are how the odds of the markets are currently standing. If you want to look at some of the big players, these fancy schmancy analysts that have the pedigrees on their wall, you could see of how many they think we're going to get. 75 bips. Remember, 25 bips is a rate cut. So a lot of people are centering around the fact of 3 rate cuts. We have some more, 100, which would be 4, Citigroup coming in at 5. Some of them are saying, no, we're not actually going to see 2024. Remember, these people are as right as they are wrong. So their guess is as good as your guess, which is as good as my guess, which is as good as my cat Piper's guess. So I wouldn't put too much weight behind that. Moving on to a bit of drama. So yeah, we have drama in the world of monetary policy, but we also have drama in the world of politics. It's an election year, and we have one guy who's running for president that is caught up in the legal system, and everyone's like, oh, is he going to be able to pay his money? Well, when his company went public through the de-SPACing of DWAG to DJT, Mr. Donald Trump made billions and billions and billions of dollars, but the drama doesn't stop there. Trump Media sues its co-founders, accuses them of quote-unquote severe mismanagement. The lawsuit seeks to bar Mr. Wesley Moss and Andrew Litinsky from appointing members to the company's board or owning any of its shares. The suit also filed a month after Litinsky and Moss sued Trump Media and Technology Group in Delaware. So to give you a very, very quick rundown on it, just because I've been covering DJT, because I think it's a legitimate squeeze candidate, here's what's happening. Trump was sued because these two gentlemen are saying, hey, we don't like what he was doing. He was trying to dilute us out of the company. Think about, did you see The Social Network where people got diluted down and they didn't have that many shares? So even when it was a quote unquote a success, they personally didn't get it. That's what they were accusing him of. He's accusing them of not setting the company up properly. So two different arguments going on. Obviously, we're going to see how it plays out in court. And because I do think it's a squeeze candidate, I want to let you know that something really, really funky is going on. So just yesterday, I reported to all of you that the short interest was 21%. I also reported that the cost to borrow was sky high. It's still sky high. The utilization is still maxed out, but now they're saying that the short interest dropped in half, even though all the shares are still on loan. I'm not buying it. Something is funky is going on with the data. And just to prove it, guess what is now on the threshold list? DJT. To be on the threshold list, just for those of you who have never heard of this term before, fails to deliver. It means someone didn't have the money or someone didn't have the asset. But when you're buying and selling, you're buying and selling from someone. So money goes one way, shares go some way. Well, that sometimes gets messed up. Now, if it gets messed up for too high of a degree, as in too many shares are not properly being delivered, failed to deliver, FTD, If that happens at too high of a magnitude for too many rows in a day, you end up on this thing called the threshold list, which means something funky is going on the background, something just to put on your radar to pay attention to in the coming days, because this situation, as I've referred to many times, is becoming one spicy tamale. Now, moving on for the remainder of this week, I just want you to know, today, we had some reports. The non-manufacturing numbers actually caused the market to really pop. We got the ADP, non-farm employment. That means bonds go down, yields go up. Kind of crazy there. For the remainder of this week, initial jobless claims comes out on Thursday, but the big thing for the remainder of the week is the unemployment report coming out an hour before the market opens this Friday. I also want to remind you, you could get this newsletter for free. Sign up for Locals. Locals, you get the free newsletter. That's also if you upgrade to premium for free by using the code Goonie. You can get into the trading Discord. Once again, free if you use the code Goonie. But on top of it, even if you don't want to do that, I give you the seasonality and I highlight other major things to pay attention to every individual day. So for example, Thursday, April 4th, there are a ton of Fed speakers chit-chatting to the public, worthwhile to pay attention to, because obviously it could have implications on the market. Similar thing with Friday. You have the unemployment rate, but then also you have all these other Fed speakers. So breaking all that down, and potentially the most useful, you get the seasonality. I want to let you know that historically, as in over the past 25 years, over the past 2.5 decades, this day, Thursday, April the 4th, I hope you're watching this video in time, favored the bulls 60% of the time. 6 out of 10 times, 3 out of 5 times, this favored the bulls with an impressive profit factor of 2.91. If hypothetically you bought at open, sold at close on this individual day, historically, this is what your equity curve would look like, clearly favoring the bulls. And just so you know, to conclude the week, kind of favoring the bears, just so everyone knows. Overall, that's what I have for you. Craziness in terms of the Fed, craziness in terms of Trump, craziness in terms of my own trade, just craziness is abundant. I hope you're taking advantage of it, and I hope you're making a ton of money. I appreciate you making it to this point in the video. Thank you. I appreciate all your support. I'll catch you in the live stream. I'll catch you in the next video update. Have a good one.
Peace out.